Now for our ETF Spotlight, let's send it down to Hollywood, Florida, and Bob Pisani with a special guest. Morning, Bob.
Good morning. Stacey Cunningham, president of the New York Stock Exchange, is speaking here later on. We've got her. And Stacey, the important thing is I am hearing a very clear message here. The theme is global growth and trying to figure out what's going on with global growth. Now, your job is it's a wonderful job. You get to speak to CEOs every single day. You just got back from Davos. What are you hearing on the subject of global growth? What are the CEOs telling you? Are they concerned about it? Is the U.S. going to outperform? Give us an overview.
First of all, Bob, I just want to take a step back and say this is the first time I've attended the Inside ETFs Conference here down in Florida, and the energy walking in is amazing. It's fascinating to think that just 25 years ago, the first ETF was launched, and it's grown into this, what we're seeing here today. But to answer your question, when I talk to CEOs, they're cautiously optimistic. I think there are a lot of unknowns out there. There are a lot of talk about trade, a lot of talk about some of the geopolitical issues that are unfolding, and how those unfold and when they unfold is, I think, contributing to what overall success looks like.
Yeah, global growth is number one issue down here. Trade, I think, is number two. The Fed is number three, but a lot of people feel the Fed is not the big worry right now. It's the global growth. The global growth concern is the U.S. is essentially the only real engine of global growth right now. Look what's going on in Europe. We just had a presentation from Greg Davis at Vanguard. We're going to talk to him. Slower. China, they're down to estimate of 6% GDP and could go below that. This is Vanguard's numbers. So global growth is going to depend on the United States essentially this year, and that's why people think the valuations might be a little high.
Yeah, I think when you mentioned Davos, when I was out there, it was apparent that there was a little more optimism from some of the U.S. CEOs than there were from some of the European CEOs. And again, there are just a lot of issues that are unfolding, and so how they unfold and how quickly they unfold, I think, is going to contribute to what that growth looks like.
Yeah, and another interesting debate is the role of public companies here. We're going to have a major speech later in the day on environmental, social, and governance issues. Paul Tudor Jones is going to argue that corporations need to start rethinking their obligations, that it is not just maximizing shareholder profit, that there are other obligations that exist for for public companies. Where do you feel publicly traded corporations should stand on this whole issue of, for example, getting involved in climate change or global warming and making stand on public issues?
So it's important to understand that companies are much bigger today than they were before. They have much more of an impact since they're such larger corporations. In fact, the number of public companies, while it's down by half over a 20-year period, the average company is 6 times the size that it was. So it means that they have much more of an impact. So the opportunity for a CEO and a company and on its whole to take a real stakeholder view is certainly something that's being asked of them in today's world and environment. Where I think it's important that we not go have any unintended consequences is not to put that pressure on a company through a regulatory or legislative regime, so that make it based more on transparency and disclosures, so companies can take action and highlight the good work that they're doing, and then let investors reward that activity. So Just Capital is doing that, and many others through indexes that are geared toward climate and ESG issues. Let investors decide. I mean, one of the things that makes this nation so great is we have the ability to use our own decision making to reward the behavior we want.
And we'll be talking to Paul Tudor Jones later on about this, and he'll be giving his outlook on what he's doing with Just Capital. I would just want to move on and talk about the IPO business. Finally, it's opened again. We've got some IPOs last week, 225 or so standing in line this year.
There are
Uber,
a lot of
Lyft.
companies. There are a lot of companies looking to come tap the public markets.
Is there enough buyers for all of these IPOs? First of all, are you confident the market's going to fully open in the next few weeks? We're going to get a flood.
So that's a different question, right? So I think there are a lot of IPOs lined up. There are a lot of companies that are looking to go, but we need to make sure the government stays open in order to support that. And so, we're definitely very focused on that because it's an important part of being able for these companies to come public. And so there are a lot of companies that are interested. I think there's a lot of investor demand for companies that are dynamic and exciting, and especially with some well-known brands out there.
There is some issues about direct listings. Of course, we only had one that ever did a direct listing, went right onto the exchange, didn't raise any new shares. That's Spotify. There's some rumors Snap might be interested in doing that. Does a direct listing matter to you at all, or is it a real option for corporations?
I think Spotify really broke new ground. So they didn't need to raise money, but they saw the value of being a public company, and they wanted to provide that to their early stakeholders and have a currency to do M&A, which we saw them announce last week. They announced a deal. So that's a unique way to go public, and they came to us to help them with that. We have a really innovative model at the New York Stock Exchange with that combination of human traders and technology, and we were able to support a direct listing. I don't think it's going to be the norm for every company that's coming forward, but there certainly are some that are considering it, and we're here to support them for that. And it's something that's really unique and an innovative way to tap the public markets.